Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, January 31st, 2024. We saw the bulls. They started off really weak in the beginning of the month. Then pretty much went nonstop for the rest of the month of January, and then ended weak again. And it's one of the things that I had said on really through the reports starting this week was that there's a lot of minefields out there, and there was too many people that were just running through this minefield because none of them have gone off. And this week was in particular where we had a lot of things that could go wrong. We had the earnings from Google yesterday that started the futures down. And then, I was really kind of thinking, like, just take it with a grain of salt until after the Fed meeting. But something I've been saying is that the Fed is kind of cornered on this one, because if they start, if they would have hinted that they're lowering rates in March, I think we would have seen inflation back up a couple points. And as much as they want to help things out, they know what their job is. And we had, the Powell came out and stood his ground and said they're not sure when they're going to cut, or, and don't, count it in. So the question right now is, all right, so they've been banking in 6 rate cuts pretty much from here. So this started down at 4,300, and the question is, 6 is off the table, right? Unless we go into a recession. So let's say it's just a 3. Are they going to take half of it off and bring us down into these levels? But the thing is that it's a, if say the Fed doesn't even do 3, and like I said, we had a good GDP last quarter, but that's typical for the fourth quarter, and really a big piece of it, has to do with just government spending and stuff like that. So anyway, let's stay away from that stuff and just figure out where we are. We know we had bearish divergences on the 60-minute chart. We had bearish divergences on the daily chart, and the intermediate term charts that I've been showing you has been the same thing. So if we go back to the 60-minute chart, and actually let's go to the 15, because this was what I was showing you as far as the wave structure: 1, 2, 3, 4, 5. So the odds of it making some kind of top around here were pretty good. But this is where we need to be a little careful. And I mean, we should head all the way down. But the thing is this: if there's some kind of curveball that is going to be thrown out there, it's going to be this. Again, I'm not saying this is going to happen at all. You have 1, 2, and then the thing is that this actually, and again, I really don't want to confuse you on this stuff, but this could have been just, the end of wave 3. And then the reason why that could have been that way is because if we're doing the wave structure up just on this wave 3, 1, 2, 3, 4. I'm sorry, 1, 2, 3, 4, 5. And this is just another wave 4 before we make a wave 5 up. I do not think that's the structure. I think that the original one that I had it out for was we completed the wave 5. And right now, if that is the case, which I think we'll find out as soon as tomorrow, then you start figuring out how much of a retracement are we going to do. Now, after the move that we've made, which I've been talking about, seeing a 50% retracement would probably be the bare minimum, and this is also support. But until you really, we have this support level let's do this. Let's go back to the 15-minute chart, because this is support right here. This is what I was saying. If the bears are able to get through this, the next stop is coming down at the 4,800. So this is pretty important right here. We do have some a little bit of a bullish divergence. So seeing some type of bounce back up into the 48.92 level, it wouldn't be out of the question on this. And then once this is taken out, then we're going to see the quick move down to the 4,800. And again, if we get below the 4,800, the next stop is coming down to the 4,650, and we haven't really seen that type of a drop going all the way since last October. So it's going to catch some of the bulls by surprise. But right now, the bears need to get it through this support level right here. If they do, then we have the more important support at the 4,800. If they lose that, that's when I anticipate us coming down to the 4,675. And for the bulls, they really got to get it above this, the 49.05 to get out of harm's way. So let's just see what plays out tomorrow. I'm sorry for the late report. I was traveling today. And with that, have a great night, and I'll talk to you guys in the morning.